Hello and welcome to India Tonight. I'm Shubhani Gharat and joining us is my colleague Jude Sanit, and we have an action-packed show today. Jude, first up, the big story of course is Wipro, and Wipro has reported mixed set of earnings in the first quarter. Revenue PAT came in line with the estimates, but EBIT and EBIT margin failed to meet expectations. However, the Bengaluru-based tech major forecast weak revenue outlook for Q2 with guidance of minus 1.5 to 0.5% growth. My colleague Mansi Dave joins us with more details on this.
IT major Wipro Limited reported its Q1 results on Thursday, and here's a quick look at the numbers. In terms of the consolidated net profit, the number came into 3,352 crore for the April to June quarter, which was up around 0.6% from 3,330 crore a year earlier. Profit came in below the consensus estimate of around 3,442 crore. Talking about the revenue, the consensus revenue rose around 10.6% year-on-year basis to 24,479 crore, but came in below the estimate of 24,776 crore. However, in terms of the revenue as well as the profit, the numbers came in in line to our estimates. The company's board also declared an interim dividend of 2 rupees per equity share. Taking a deep dive into the intricacies, the IT services company's gross revenue increased 1% sequentially, while IT services revenue stood at $2.61 billion, which was down around 1.4% quarter-on-quarter, but up 1% year-on-year basis. In constant currency terms, Wipro's IT services revenue declined 1.2% sequentially and increased 0.9% from a year ago. Total bookings for the quarter stood at $3.37 billion, which was down around 2.7% sequentially in constant currency, while large deal bookings rose 12.9% quarter-on-quarter to $1.6 billion. IT services operating margin came in at 16%, down 130 basis points sequentially at 120 basis points on a year-on-year basis. Operating cash flow was 3,288 crore, equivalent to 98% of net income, while the voluntary attrition stood at 13.9% on a trailing 12-month basis. All in all, the revenue and the profit figure were in line with our estimates. However, the EBIT and the margin figures were amiss.
And Mansi was also at that earnings press meet where she spoke to Wipro CEO Srinivas Pallia on the deals that the IT majors struck and the time taken for a ramp up to actually go about taking place. Let's listen in to what the Wipro boss had to say.
Srini, my first question to you is on the deal wins and its impact on the revenue growth. So, अच्छे deal wins के बावजूद, in spite of good deal wins, the revenue growth has been in line, or let's say a little bit of a concern. आपके हिसाब से सबसे बड़ी चुनौती, challenge क्या है? Client decision में देरी, deal ramp up की धीमी रफ्तार, या global macro environment, और meaningful growth की वापसी कब तक देखने को मिल सकती है?
I think you gave me the question and also the answer. Honestly, that's what you did, right? So, yes, we had 13 large deal wins. We did a $3.3 billion of booking, out of which 1.6 comes from large deals of those 13 deals, and one of them is Mindsprint as well. But having said that, you're bang on. Some of the deals like Aparna talked about is taking time for ramp up. So when you don't ramp up, bookings don't convert to revenues. Some of the ones which were done in the few quarters back, they are suddenly started picking up. Especially the BFSI one, which we talked about, the mega deal, which is we're seeing a momentum go up. And I think discretionary spend is also is going slow at this point in time. And I would say the demand environment from last quarter of my commentary to this quarter has not changed. Okay. And whenever we give a guidance, because we are the only ones who give quarter-to-quarter guidance, and we give that guidance based upon what we see, right, in terms of the spend and how the clients are consuming. So, to me, while yes, we are giving a minus 1.5 to plus 1.5% growth guidance, but we are baked in. From a long-term perspective, I think the investments that we are making, and as the market matures on AI consumption, AI implementation, we should be able to hitchhike onto that bandwagon. So we are keeping both the current track and the future track together.
Now moving on, Tech Mahindra reported steady set of numbers for the first quarter. Revenue, EBIT and EBIT margin managed to meet street expectations. However, PAT came in lower than estimates despite seeing over 8% jump on the sequential basis. The tech giant also reported over 33% jump in the new deal wins, which came in at over $1.08 billion in the last quarter. Let's also listen.
The banking and financial services sector for us grew 8.1% year on year. We continue to see healthy demands in areas like payments, modernization, wealth platforms, regulatory compliance, identity and access management, and AI-led transformation. During the quarter, we also announced the acquisition of Avant Techno Solutions, a Canadian-based firm specializing in payments, modernization, and wealth platforms. The acquisition is aligned with our stated strategy of deepening our presence in payments and the wealth segment, which we have consistently identified as important growth areas. It also strengthens our position in a structurally high-growth segment of financial services. The manufacturing sector for us grew 17.2% year-on-year. Our focus remains on scaling sustainable growth across aerospace, industrial, and process manufacturing. We continue to see strong client interest in intelligent, data-driven operations that bring together AI, data platforms, engineering, and enterprise systems at scale.
And even as concerns grow over AI disrupting the global technology ecosystem, the latest earnings from Indian IT companies tell a rather different story. So far, there is very little evidence that AI has actually dented revenues or demand, with companies reporting resilient performances and steady client spending. In fact, industry leaders say AI is currently acting as a productivity enhancer. Listen in.
If you see all the numbers which are coming, including whatever numbers have come today, one thing is clear that, the fear which everyone had that there will be a deep deflation in growth because of AI, I think none of the results reflect that as of now. And I think that is the biggest positive to read across. Second, we have seen also some green shoot in terms of that, the decline in headcount number which was happening across the sector, that has also reduced materially. In fact, in some of the cases, we have seen some hiring. So the limited point I would like to highlight from a sector perspective is that, incrementally, the stability will return in the sector. And as enterprise level AI starts getting implemented, and some of the companies which had a bad base and also which had some challenges earlier due to one or two vertical not performing, I think those will also start stabilizing. So overall, I think the worst seems to be behind. When will the good things come? It's very tough to say, but from here, things shouldn't deteriorate.
It sounds very positive. However, albeit your commentary seems a bit cautious, Sandeep. But let me also ask you about Tech Mahindra, because the EBIT meeting expectations, that number, can Tech Mahindra sustain or improve margins over the next few quarters despite wage hikes or pricing pressures?
We run a PMS, so very hard to comment on any specific company. But let me tell you, I don't see the sector going through any margin pressure in next 2 to 3 years. My view is that, the sector is entering into a phase where growth may be a little lower for the sector, but margins and profit will be much better because of the efficiencies which are there. So what is happening is that they are taking all the deflation in their books, and oppose that you will not see any big impact of cost. So I think we are entering into a phase where growth may be lower for the sector, but profit growth will be much higher. So it will be applicable to broadly everyone in the sector.
Now, Reliance is set to, in fact, report its June quarter numbers with a steady set in store. Expectations of growth across sectors, barring the upstream business. Jio could also see an uptick in ARPU. My colleague Ashesha joins in with more details on what to expect.
Well, yes, we are expecting steady set of numbers from big boy Reliance Industries this time around on a sequential basis. Revenue this time around is expected to come in at about 2,98,700 crores, which will be an increase of about 2% sequentially. And EBITDA, meanwhile, could jump up by about 5% on a sequential basis. Across the board, all sectors are expected to report growth, barring oil and gas segment. And over here, we are expecting EBITDA to decline this time around on the back of lower production. Let's talk about each of these segments one by one. And let's start with the O2C segment. And over here, we are expecting bumper performance this time around on account of rising gross refining margins on a sequential basis. So O2C EBITDA is likely to jump by nearly 15 to 18%, both on a sequential as well as on a year-on-year basis. Strong SEC refining margins, stronger GRMs and improved petrochemical spreads are likely to improve the performance of the oil to chemical business. Meanwhile, as I mentioned, we are expecting some bit of weakness in the oil and gas segment performance, and this is on account of lower production in the quarter gone by. So EBITDA for this segment is likely to decline by about 11 to 12% on a year-on-year basis, and this is on the back of lower KG 3/6 gas production in the quarter gone by. Meanwhile, let's also talk about the retail segment, where EBITDA could rise by about 4 to 7% on a year-on-year basis, but we are expecting this EBITDA to decline by about 2 to 3% on a sequential basis. And this decline in EBITDA on a sequential basis for the retail business will be on account of scale-up of hyperlocal deliveries, which is likely to weigh in the quarter gone by. Meanwhile, let's also talk about Reliance Jio, and over here also we are expecting steady set of numbers. Revenue could rise by about 2% sequentially, EBITDA is expected to rise 3%, and margins are expected to remain steady at that 54.3% mark, similar to what the company had reported in the previous quarter. Now, as far as ARPUs are concerned, they are expected to come in at about 215 rupees per unit, marginal increase from 214 that the company had reported in the previous quarter, and the company is expected to register new fresh client additions of about 8.7 million on a sequential basis. Other than that, any kind of management commentary that comes in with respect to valuations of Reliance Jio will also be very crucial. But other than that, steady set of numbers expected not only for Jio but even for Reliance Industries on a consolidated basis, with retail expected to show growth. Oil and chemical business is expected to show exceptional growth this time around, although we are expecting some bit of weakness for the oil and gas business this time.
Shifting for action from geopolitics next, as the conflict in West Asia escalates following the collapse of the ceasefire, Iran has threatened to destroy all infrastructure in the region. In fact, the United States has intensified its strikes targeting Iran, and targets further north have also been struck. The US CENTCOM has said that the country has used precision munitions to hit targets in multiple locations, including Bandar Abbas. Sumita gives us a few details on how the situation in West Asia is progressing.
Bahrain, Kuwait and Jordan have come under attack from Iranian missiles and drones. Remember, Tehran warned the United States of regional retaliation if its infrastructure is attacked. Remember, the United States had said that it launched a fresh wave of strikes against Iran as President Donald Trump warned Tehran once again to better behave. In fact, he also added that Iran desperately wanted to negotiate. Meanwhile, on the other hand, we did see the United States Vice President J.D. Vance. He dismissed the possibility of any boots on the ground. Meanwhile, what we've seen in terms of the developments in West Asia, well, explosions were reported across Iran, including in places like Chabahar, Bandar Abbas, amongst others. The U.S. military, which had launched strikes against Iran, said that Iranian military capabilities used to threaten vessels moving through the Strait of Hormuz, they had been targeted. In fact, air defense systems were also sounded in the capital, according to state media. Remember, this escalation is following the collapse of a fragile truce that was achieved between both the sides, that is Iran and the United States. What we've also heard from Iran's top negotiator Mohammad Bagher Ghalibaf is that he said that Tehran had no reason to abide by the deal if it did not benefit from it. He, in fact, went on to say that we are in an essential and an existential war with America. Remember, Iran also said that the Strait of Hormuz was an inviolable red line. It's also warned that if the U.S. President Donald Trump carried out his threat to attack Iran's infrastructure, it's going to strike all infrastructure across the Gulf region, and which is why we're seeing tensions build up in the West Asia region. But what really happens as far as the question of the ownership of the Strait of Hormuz is concerned, because that's an important part as far as the MOU that was struck between both the sides as well. This will be an important development on who really controls the Strait of Hormuz, or what really happens to the management of the Strait of Hormuz.
Sumita, thank you so much for that update. Now, let's quickly take a look at Wall Street this Thursday. The S&P 500 slipped 0.3%, weighed down by weakness in chip stocks. The Nasdaq Composite fell 0.4%, while the Dow Jones Industrial Average traded about 0.3% higher. Semiconductor shares remained under pressure after Taiwan Semiconductor's latest earnings update triggered mixed reactions across the sector, dragging on the broader technology trade. Wall Street is coming off a winning session after a softer than expected U.S. producer price index strengthened hopes that inflation may be easing.
And with that, we're slipping into a short break, but we'll continue this bulletin on the other side. Keep watching ET Now for more. Welcome back. You're watching India Tonight with me, Jude Sanat and Shibani Garat. JSW MG Motor India has unveiled the MG Adapt platform. In fact, Adapt is India's first multi-new energy vehicle platform. In fact, we spoke to the MD of JSW MG Motor India, Anurag Mehrotra, on this milestone. Let's listen in.
Having us, it is indeed a remarkable day. As an engineer, I can tell you, your heart goes out every time you work on a platform, and platform is essentially a large part of what a car is. And today we got an opportunity to launch India's first multi-NEV platform, which will package all the 4 technologies that today are available in the world as far as new energy vehicles are concerned. So whether you are a BEV customer, or you are a hybrid customer, or a plug-in hybrid customer, or even the latest range extended EV technology that is there. So this platform is extremely versatile, and it is India's first multi-NEV platform, which will allow all the 4 technologies to be brought to India at competitive price.
What expectations from the India market, and any comparisons to what and how it has fared in some of the other more evolved automotive markets around the world?
Yeah, that's a great question, Shibani. I think if you look at a couple of years ago, almost 75% of all the sales globally were in internal combustion engine cars. It is projected that in the next 10 years or 9 years, 2035, that share of internal combustion engines will come down to only 23%, which means 3 out of 4 cars sold globally will be new energy vehicles. And that is the future of global automotive as well as Indian automotive. The forecast for India is that by 2030, almost 30% of all the cars sold will be new energy vehicles. And as we've seen this year alone, in the last month, as all of you reported, the industry's already crossed 8% in terms of EV penetration, which is a very strong sign that potentially getting to that 30% could happen sooner than anticipated.
Right, moving on, let's go over to Puri. In fact, 1 devotee has died while over 100 fell ill on a temporary surge at annual Jagannath Rath Yatra in Odisha's Puri. However, the officials claim that there was no stampede during the Rath Yatra. According to official sources, a temporary crowd surge caused 7 devotees to feel unwell. They were immediately shifted to the hospital for treatment.
Up next, an exclusive roundup of the week's key developments from Maharashtra in our Maharashtra 360 segment.
From major policy decisions and governance reforms to infrastructure expansion, social welfare and citizen-centric initiatives, here's a look at the key developments shaping the Maharashtra's progress in our special Maharashtra 360. Maharashtra has announced a major push towards safer and more efficient transport infrastructure, with CM Fadnavis unveiling the state's vision of making Maharashtra railway crossing free. Addressing a program in Nagpur, the Chief Minister, in the presence of Union Minister Nitin Gadkari, announced the construction of 145 railway overbridges over the next 3 years, while inaugurating 484 crore rupees worth of railway infrastructure projects across the state. The government has approved the construction of 145 railway overbridges as part of its long-term plan to develop the 524 railway crossing structures required across the state of Maharashtra. The projects inaugurated include 3 railway overbridges, 4 subways and 1 road underbridge, completed at a total cost of 484 crore rupees across multiple districts. Most of these works have been executed under 50-50 cost-sharing model between the Ministry of Railways and the Government of Maharashtra. The Chief Minister said that Maharail's adoption of modern engineering practices and innovative construction technologies is helping deliver railway infrastructure with greater speed, quality and efficiency. And the Maharashtra legislature's monsoon session concluded with a customary tea meeting attended by CM Fadnavis, Deputy CMs Eknath Shinde and Sunetra Ajit Pawar, along with legislators from both houses. Here's a look at some of the session's biggest takeaways. Among the session's key legislative milestones was the unanimous passage of the Maharashtra Women Farmers Empowerment Bill alongside the government's decision to enhance the farm loan waiver limit to 2 lakh rupees. The legislature also approved supplementary demands exceeding 97,000 crore rupees and cleared the formation of a uniform civil code committee. And Maharashtra's push towards inclusive urban development received a major boost in Nagpur as CM Fadnavis laid the foundation stone for the Maharshi Sudarshan Valmiki Colony and the Swapnapurti housing project under Pradhan Mantri Awas Yojana 2.0. Announcing the appointment orders for around 500 personnel would soon be issued, the CM reaffirmed the state government's commitment to the welfare of the sanitation workers alongside affordable housing for economically weaker sections. Union Minister Nitin Gadkari described the initiative as a commendable project that will significantly improve the quality of life of the Valmiki community while also providing permanent homes to hundreds of families. Under the Maharshi Sudarshan Valmiki Colony, the Nagpur Municipal Corporation will construct 392 two-bedroom apartments exclusively for sanitation workers. The Swapnapurti housing project under PMAY Urban 2.0 will add 518 affordable 1 and 2 bedroom homes for economically weaker families, taking the total to 910 new dwelling units. Both the projects are targeted for completion within 3 years and will include modern amenities such as solar power systems, water supply, landscape gardens, playgrounds and security infrastructure, with the Chief Minister directing that construction quality be maintained at the highest standards. And Maharashtra Deputy CM Eknath Shinde has reiterated the Mahayuti government's commitment to building a safe, capable and developed Maharashtra, outlining its priorities during his reply to the final week motion in the Legislative Council. Shinde said that the government is simultaneously strengthening disaster management, infrastructure, citizen welfare and governance reforms while also at the same time accelerating redevelopment and public service delivery. He also highlighted the state's focus on technology-driven administration, women's safety and transparent implementation of development projects across the state of Maharashtra. Shinde said that the government is strengthening disaster preparedness through faster emergency response systems while also at the same time adopting a zero-tolerance approach towards cybercrime, narcotics and crimes against women. Maharashtra Deputy CM Sunetra Pawar visited the landslide-hit Patan village in Pune's Mawal Taluka to meet the Tikon family, which lost 3 members after a rain-triggered hail collapse buried their home near Visapur Fort. Now expressing condolences, she assured the family of the government support and also announced that 12 lakh rupees at the rate of 4 lakh rupees per deceased had already been credited to the family's bank account, while an additional 1.2 lakh rupees has been sanctioned under the Gharkul housing scheme to help rebuild their house. Pawar also reviewed the situation with district officials and said that the government will ensure comprehensive rehabilitation for the affected family and the surrounding area. And those were all the updates we could pack for you in this edition of Maharashtra 360. Until next week, take care.